Travel costs are one of the biggest expenses for people that own and operate a foreign rental property. In this video, we're going to talk through how to make sure you get the most benefit from a tax perspective. You're documenting it correct to make sure that you can justify those costs as expenses. You're able to deduct those foreign travel costs, and we're going to talk through how to ultimately put that on your tax return every year. So a lot of my clients, I work with a lot of people that own foreign rental properties, and maybe they don't even live in that location. They use it as a vacation home, or it's just an investment property. So in order to do that, they're spending a lot of time traveling back and forth. Sometimes it's for personal purposes, and there's a built-in business aspect to it, obviously, because if you go down to your rental property, you may have some personal time. You may spend some time working with your property management team, doing repairs and things like that. And that's a big expense, flying down there. Maybe you even have to stay at a hotel room or something like that. If the property is not ready, you're doing repairs and stuff to it. One of the biggest questions I get from my clients is, how do we make sure we can deduct those travel expenses? For example, if you're using a property management company, they're going to give you a profit and loss statement at the end of the year that's going to clearly show the expenses you had during the year associated with that property. Maintenance, cleaning, taxes, things like that are all going to be included in that profit and loss statement that they provide you. But it's not going to include things you purchased in the US and took down there to use, like if you purchased towels and sheets in the US and take them down to that property. That's an expense you need to pick up. But also the bigger expense for that is usually the travel itself. So travel expenses are deductible when you're considered to be away from home of where your business activity takes place. So we have to first find what your tax home is during the year. So if you're a US person with a foreign rental property, let's say you're a wage earner, you live in the US, you have an employment job, that's your tax home, is in your home in the US. The foreign rental property is not. So when you travel to that rental property, that's going to be away from your tax home. That's potentially a deductible travel expense. Now, the rules are very specific for when it's actually deductible. So the IRS says that in order to deduct that travel expense, the purpose of the trip, the primary purpose of the trip, has to be for the operation of the rental activity. So if you go down there and you spend 7 days at your rental property and you spend 1 day meeting with your management team to talk about the next year, how things went this past year, that's not going to cut it. That 1 day that you're spending with that rental activity is not going to be enough to justify the primary purpose of that trip being for the rental property. So in that scenario, instead of being able to deduct that whole travel, the only thing you can deduct is maybe the cost of the car ride or Uber ride to meet with your property management team. If you paid for lunch, you can deduct half of that. That's all that would be deductible. But if we could justify that the primary purpose of the trip was for the operation and management of that rental property, then the flight would be deductible. Your meals traveling throughout the entire process would be deductible to the percentage that we allocate to the business part. So let's put this into real numbers in a real scenario. So if you have a rental property, say in Costa Rica, and you use a property management team down there, you need to go down there to check on some repairs that you're doing. You need to go down there and meet with a new maintenance person that's going to be working on your property. You need to talk with a lawyer who's helping you draw up new rental agreements with your clients. Maybe you even have some client customers you want to meet with down there that come to your property. So what we want to build is a case for two purposes. One, to say the primary motivation of going was to work on the rental property. So that means you may have some personal time built in there, but the reason you went was for the rental property management. You wouldn't have gone otherwise. That's the first motivation. The first thing is the motivation, but that alone doesn't cut it. You can't just say the only reason you went was because of that meeting, but then the meeting be a very small part of the overall trip. That doesn't cut it. So what we need to do then is, when you're down there, build a log to show that most of the days had rental activity management built into it. There's no rule that says we have to go like track every hour and say these hours were spent on business, these hours were not, and see which one is bigger. That's not what you have to do. There's not a bright line test necessarily. But what I like to do is intentionally schedule business activities so that it shows and paints a picture of the primary activity and motivation being the rental property management. For example, if you have those 3 or 4 meetings that you need to do and you're going to go down there for 6 days, in that scenario, don't go down there and do it all in one day. So you have 5 days of personal days and 1 day packed in with the business stuff. Not to say that you couldn't still qualify in that scenario, but it's a much harder argument because you're going to have 5 days of purely personal and 1 big day of business. So what I would say is spread that out some. Have a meeting and document that you had a meeting 4 or 5 of the total days. In that case, every day has a business purpose behind it, and it's a much easier argument to make in that case that every day that the primary purpose was business. And then after that, then we're coming down to a percentage of, okay, how much of the total trip was business versus not? Maybe 75% was business, 25% was personal. And then we can deduct 75% of the airfare, of the meals, of the travel within. So what I do for my clients, we have a tracker that helps track days. It tracks for business travel perspective, where you're in real time writing down the motivation of the trip and the business activity that took place on each of those days. Because trust me, I've done this myself. It's much harder a year later when your accountant asks you, hey, which of these days had business activity and what did you do on those days, to try and remember a year back to what you did on those days, why you did it. And you're gonna have an even harder time 3-5 years later explaining that same thing to an IRS agent. So use a tracker, just write in real time business reasons for why you're doing what you're doing, keeping travel logs. Of course, if you work with us, that's part of what we do is in the tax confidence package is help our clients document things intentionally so that we're building a case for supporting tax deductions on travel, because that's going to be a big part of your expense when it comes down to these. And if you're interested on what you can do with those expenses at the end of the day when it comes to these rental properties, watch some of my other videos that have to do with deducting rental property costs, passive activity loss, real estate professional rules, short-term rentals. All of that gets baked into this at the end of the day. We can help make sure that things are filed correctly. We're utilizing these rules to the best of your benefit so that you're filing a tax-efficient return. Reach out to us at McGowinTax.com and we'd be glad to help you out.